Good day Forex trader. Your USD Forex signal, Euro pressured as recession risks rise. There is a likelihood that the pair will continue falling as bears target the next key level at 1.0700. Bearish view. Sell the Euro USD pair and set a take profit at 1.0700. Add a stop loss at 1.1050. Timeline, 1 to 2 days. Bullish view. Set a buy stop at 1.100 and a take profit at 1.1150. Add a stop loss at 1.070. The Euro USD pair continued its bearish trend in the overnight session as risks of a European recession rose. It dropped to a low of 1.0815, which was the lowest level since May 2020. It has crashed by over 13% from the highest point in 2021. European recession risks. The European Central Bank, ECB, is between a rock and a hard place. For months, the bank has been implementing its quantitative easing, QE, policy in a bid to cushion the economy from the COVID-19 pandemic. It has also left interest rates in the negative zone for a while. Now, there are concerns that the ECB will have a difficult time to exit the accommodative policies if the European economy moves to a recession. With inflation surging, the bank needs to start hiking rates and transitioning to a new normal. However, with the ongoing crisis in Ukraine, there are fears that the European economy will go through a recession because of the rising energy prices. Russia has already warned that it could cut supplies to European countries as a revenge for the sanctions. If this happens, there is a likelihood that oil and gas will continue their bullish trend, leading to substantial inflation. This inflation will then limit consumer spending, which is the biggest part of the bloc's economy. The Euro-USD pair dropped as investors rushed to the safety of the US dollar. Like the ECB, the Fed is also facing tough choices as inflation keeps rising. The US will publish the latest consumer inflation data on Thursday. Analysts polled by Reuters expect the data to show that inflation approached 8% in February and the trend will likely continue. There will be no major economic data from the US and Europe on Wednesday. Therefore, investors will focus on geopolitical issues. Your USD forecast. The daily chart shows that the Euro-USD pair has been in a strong bearish trend in the past few days. The sell-off accelerated after the pair moved below the key support level at 1.1176. It has moved below the short and long-term moving averages while the relative strength index, RSI, has moved below the oversold level. The MACD has also dropped below the neutral line. Therefore, there is a likelihood that the pair will continue falling as bears target the next key level at 1.0700. Gbp Usd Forex Signal, more weakness likely amid energy costs. The pair will likely continue falling as bears target the next key support at 1.3000. Bearish view. Sell the Gbp USD pair and set a take profit at 1.3000. Add a stop loss at 1.3200. Timeline, 1 to 2 days. Bullish view. Set a buy stop at 1.3150 and a take profit at 1.3230. Add a stop loss at 1.3100. The Gbp USD pair dropped below a key support level as concerns about the state of the UK economy as the crisis in Ukraine continues. The pair is trading at 1.3108, which was the lowest level since November 2020. It has fallen by more than 8% from the highest point in 2021. UK energy costs soar. Energy is an important part of the UK economy. In the past few months, the overall cost of energy prices has been in an upward trend as concerns about supply and demand remain. For one, the OPEC Plus cartel has adopted a strict policy of gradually increasing supplies even as global demand rises at a faster pace. The situation has worsened in the past few weeks as Russia increases its focus on Ukraine. The country's military forces have killed thousands of people and forced most of them to become refugees. In their response, most Western countries have added the toughest sanctions ever. On Tuesday, the Boris Johnson administration announced new measures to sanction the country. Its energy companies will now be barred from importing Russian crude oil. In the past week, many refiners have been self-sanctioning by refusing to take the country's oil. Therefore, there are concerns about the state of inflation in the UK. Recent data showed that inflation surged to over 5% in January. Therefore, since energy is an important part of the country's inflation calculation, there is a likelihood that prices will continue to accelerate. Therefore, this performance will be a difficult thing for the Bank of England, BO, which needs to hike rates while preventing a recession. The bank has already raised interest rates, but their impact on inflation will be limited. The Gbp USD has also sold off because of the ongoing demand for safe havens. The US dollar and gold have risen while US stocks have retreated sharply. Gbp Usd Signal. The daily chart shows that the Gbp USD pair has been in a strong downward trend in the past few weeks. And this week, the pair managed to move below the key support at 1.3167, which was the lowest level in 2021. The pair has moved below the 25-day and 50-day moving averages, while the Relative Strength Index, RSI, has moved below the oversold level. Therefore, the pair will likely continue falling as bears target the next key support at 1.3000. Aud USD Forex Signal, path of least resistance is lower. The pair will likely keep falling since the break and retest pattern failed. Bearish view. Sell the Aud USD pair and set a take profit at 0.7200. Set a stop loss at 0.7350. Timeline, 1 to 2 days. Bullish view. Set a buy stop at 0.7280 and a take profit at 0.7350. Add a stop loss at 0.7200. The Aud USD pair dipped below a key support level as concerns about the global economy continued. The pair is trading at 0.7262, which is the lowest level since March 2nd. It has fallen by more than 2.4% from the highest point last week. Australian dollar pairs gains. The global economy is facing substantial risks as the Russian invasion of Ukraine continues. There is an increasing risk that many economies will undergo a recession as the costs of most items jump. For example, in the past few weeks, the prices of most commodities have been rising. Natural gas has risen to a record high while oil prices have moved to the highest point in over 14 years. At the same time, nickel, aluminum, and copper have also been rising. Soft commodities like wheat, cotton, and soybeans have also been in a strong bullish trend. Therefore, many countries will struggle to deal with the new normal since it comes at a time when they are still fighting the COVID-19 pandemic. It is against this backdrop that the AUD/USD pair has retreated as investors move to the safe haven of the US dollar. Still, the performance of the AUD has not been as dramatic as that of other currencies like the euro and sterling. This is because the Australian dollar is often seen as a barometer of commodities because of the vast it exports to China and other countries. There are also concerns about what central banks will do. The Fed has already hinted that it will start hiking next week, although the degree of rate hikes is not clear. Some analysts anticipate a 25 basis point hike while others expect a 0.5% hike. It is not yet clear when the RBA will start hiking its interest rates. Aud USD Forecast. The Aud USD pair rose to a multi-week high of 0.7440 last week. Since then, the pair has been in a strong bearish trend even as commodity prices remain at elevated levels. As it dropped, it managed to move below the key support level at 0.7314, which was the highest level in January. The pair has moved below the 25-day moving average and is along the lower line of the Bollinger Bands. The Relative Strength Index has also moved below the oversold level. Therefore, the pair will likely keep falling since the break and retest pattern failed.